Good evening. This is the Elliott wave update for the NASDAQ 100 for Sunday, July 24th, 2022. On Friday, the markets early continued to jump higher. And as I thought it might, the NASDAQ did manage to push itself back up and get above 12,700, even though it was very brief. And it was a level that was immediately rejected. And the market dropped and then began its stronger decline, which took it all the way to the close. So we are starting basically a little bit higher, a little bit lower. They're just kind of bouncing it around, pretty much at the unchanged level, up 450 right now, but also $4.50, let's say. Okay, 350. So it's not really moving around. Now, what do we have in front of us? We have the possibility that what Friday did was just put in the top of wave three, right? Looking at the daily, we're in the C wave up, and it's going to be 5 waves. 1, 2, and then I got a break. 1, 2, 3, 4, 5 of 3. So we could have 1, 2, and this could be 3. And then we still have a 4, which could be doing now, and we have a 5. 1, 2, 3, 4, 5 to put a C wave in. It does not look very promising against the total full docket we have coming next week or this week. Now, quickly reviewing economic data. Tuesday, we have consumer confidence, new home sales, and also Case-Shiller. I think they'll just start saying that prices are beginning to come down, so I'm not worried about that one. But consumer confidence should be big. Then on Wednesday, we have durable goods, international trading goods. We have EIA, which will do crude. And then the long-awaited FOMC announcement with the Fed chair press conference, 2 p.m. and then again at 2:30. On Thursday, we have GDP and jobless claims. And on Friday, personal income and outlays. So these all continue to really suggest that, this is going to be all focus, because the rest are going to feed into whatever that decision is going to be. So full docket. Then on top of that, we also have Apple reporting on Thursday, 28th. We have AMD reporting in August, so no threat yet. We have Amazon on Thursday. Google reports on Tuesday. And then Intel reports on Thursday. Meta comes in on Wednesday, I believe, Wednesday the 27th. Yes. And so on and so forth. And Microsoft on Tuesday. So we have a wide range. And also coming in the midst of everything else, we're also hearing just a whole bunch of stuff. So again, I really cannot trade it in terms of it's bullish or it's bearish. These are what's going to affect the market. Each one of us can either try to determine what everybody else is really interpreting it as, or just trade the number. Just trade the number that's in front of us. Just use a different methodology to try to determine. And that's what I do when I'm using Fibonacci, when I'm using the moving averages, when I'm using the different techniques that I can have. Moving averages, by the way, I love it. I'm getting a lot of people that are contacting me and just leaving stuff in the comments on how they're doing with the moving averages, but they just like the fact that they can add it and that it adds a layer for trading that is more dependable. Let's say that. And so, but their numbers and the periods can be shortened, lengthened to fit the style of trading and to see how you would be interpreting these particular moves and where the possibilities lie. So back to what can be going on. Again, if I'm thinking just a 1 and a 2, and this is just actually wave 3, and then we're in a 4. Because the only other choice that I would have is that was the 3, and this was the 4, and that was the 5, and that's the again, that would just complete the 3. Sorry. So I still think we got one more pop. If though the market starts to react or be prepared for downside, we also can realize it because number one, on the hourly chart, we have already broken the 8, the 20, and the 50. And now we're going back up as we tried to on Friday into the close, but came sliding back lower. But in any case, we're still playing in these moving averages. We have down below at 12,196, or basically 12,200, the 200 EMA, the hourly 200 EMA. The SMA, the 200, is at 12,000, almost 100. So these are the levels where if this kicks in and they just start to kick, they should break along with these Fibonacci levels. And that would give us more evidence, support, whatever we want to call it, that minor wave 5 is indeed in force. Because I understand and I read the waves the same, hopefully, as everybody else, and I leave open the possibility. Doesn't mean that it'll do it. But should it do it, I would look for them to reach for the stars again and get itself above 12,713. And again, we had resistance, I believe, at 12,000 right there. 38, 810, 810, 818, so 810 to 820, and then it jumps to 930, 12,930. And yeah, on a real push, whatever the reason, please do not attach anything to it, because I really do believe if it did it, it's like to be rejected just like this one was. There's too many big things. There's too many economic things that really are going to be giving us information as to how well the Fed is or is not doing, how calm or on the rampage inflation is. So each case will back up what traders really should be more focusing on. The future and how it's all going to be rosy, or today, which is not such a rosy picture. Maybe we need to kind of really refocus on this level. Not that these companies are going down the tubes, not that the economy is going to go shooting out the window, but where it's sitting cannot be sustained because. So what is that level? Where is the value? That's what really needs to be determined. And the market has to do that. And the only way we can do it is by having all these update information and actually running through your computer models to make sure that everything matches. So in other words, this is what the company makes, this is what the company reported, this is what the company has to continue to make, and can they? So again, a lot of models, a lot of work. But even if we just follow the market profile, there are going to be levels all the way up and down. And again, those come via points of control, value area high, value area low. And then as the market progresses, there are extended levels, there are naked levels, which means that they've kind of been there, but they've not been challenged, they've not been broken. So not that they're still effective, but they're there. And it gets included in the calculations for a lot of how people trade market profile. So these are areas that do get reached, but they're just actually measuring the supply and demand. So that's the difference between trying to be bullish or bearish. Bullish means, okay, that's the demand. The demand is to buy. Okay, well, if you're a trader, do you want to sell here? No, well, then you're not going to provide value. So you got to go to wherever you find that value, you as the seller. And most of the time it's like, well, if I bought it first, then I'll do that. But in any case, what happens is it just the supply goes until the supply is done. And I think we've seen a lot of funds and portfolios flip. So in other words, they got bullish signals, they turn bullish, they reallocate out of certain defensive, I guess, positions and into more what they see as being bullish. So often in Elliott, I want to say, because again, I'm counting a C wave down, an intermediate wave C wave down. And within that, I've got 1, 2, 3, and this is still a 4. Is 4 down? We're going to get that 5. That's what we've just been discussing. And those numbers all reflect the areas that this could come to. So now, if it does, value is going to be, of course, challenged to the downside. Right now, value to the upside, but I think as the week progresses, it's going to tighten up. But still looking for the completion point for an intermediate wave C. And that then in turn will complete the primary wave B. So again, thinking of objectively versus subjectively, not trying to put any bullish figure on it. I think that value turns lower, and the supply and demand calculation is going to be reversed more or less. There will be the sellers will be searching for value where they can sell out these positions rather than the buyers having to seek out, which would force the market to tick higher, tick higher, tick higher, tick higher. So if that whole energy switches from buying to selling, then it's the same strategy. It's like, where's value? So you're going to be looking at points of control. You're going to be looking at value area lows. You're going to be looking at value area highs, because then you're going to be able to make judgment calls on what's going on and where it can go. And then using the moving averages in conjunction should really help. So for tomorrow, again, I'm going to drop down to the hourly chart and just see if we can't take an inside look. It's not been real clean. So whether this is done or whether we have one more, I'm leaving open. Again, if it goes up, we have resistance all the way up to 29.30 at different various levels, and that's price resistance. So turning lower, we know that story. It needs to start breaking below it, which it already has. So it needs to hold below the hourly 50, turn lower again, start breaking below the 200s, that's the EMA, the magenta, and more of the line is the SMA, and then break below these levels. Ultimately, this is where it starts to line up. We're still looking at 10,700 down to 10,670. That's a nice little zone. And that, I think, would just be completing the minor 5 and in turn, the primary, intermediate wave C and the primary wave A. Then we're set for a big, strong rally. And we'll see how that all plays out. So for tomorrow, continue to look at it objectively versus subjectively. We got a lot going on, and we'll see how it all starts to play out. Tomorrow, again, being the Monday, and it might be light in terms of people moving in and out of the market, but without some more solid news to base a sell or a buy on, it may just walk itself higher. I've seen that happen. In any case, have a great trading day tomorrow, and the next update will be on Monday, the 25th.